Hello, future millionaire. All the indoor places I normally go are in lockdown, so everybody has to wear masks, and I really hate wearing masks. So I have to come to the beach, and I found one of the streets that I really like. Maybe I can introduce you guys to such a street. The place here is called Surf Street, Bilinga. This is actually my first time coming here, so we'll see how this place goes. But what I like here about is the place is very much. Oh gosh, redo. Hello, future millionaire. Outdoor environment is still the best way to shoot videos nowadays because number one, you guys get to see my surrounding. Number two, more important, I don't have to wear a mask. Nowadays, wherever I need to go, I have to wear the damn mask, which is pretty stupid. So here, at least, I don't need to worry about that. And let's talk about Bitcoin Cash. Let me see if I can find a good standing for the tripod, and we can talk about Bitcoin Cash. All right. So the last few days in the crypto space has been incredibly interesting, and I have to say that I have never seen action like this in the ETF space. You must have noticed what's going on with the Bitcoin Cash ETF. So today I want to talk about this. The BCHG, that ETF, has never experienced such a heavy volume as we have seen in the last few days. This is for me personally a very, very good sign. So let me explain to you what normally institutionals do. First of all, when institutionals start to get into this space, they look for bargains. Institutionals never like to overpay. So they look for the opportunity to pay as little as possible for the best asset class. So in the grayscale ETF section, they have the choice between the BTC ETF, the Ethereum ETF, Ethereum Classic, then you have Litecoin, Bitcoin Cash. Those are the big names. So those ETF investors, they look at valuation and they ask themselves, oh, wait a minute, the certain ETF is trading significantly below asset value, which means if that ETF gets liquidated tomorrow, they actually get more money back than if they are holding on to the ETF. This is currently the case with the BTC ETF and Ethereum Classic ETF. So, but there are other ETFs that's very much overvaluation compared to the holding valuation. In this case, the number one is actually Litecoin. So the Litecoin ETF is trading at significant premium over its holding value, and the valuation of the Bitcoin Cash is still trading above the holding value as well. So those ETFs, what they normally do is they sell the overvalued ETFs, buy the undervalued ETF, and creating a pair trade. However, those pair trades are not without risk. And you can imagine there's no such thing as risk-free investments in the world. If there's such thing as risk-free investment, everybody will be buying it and nobody will ever get blown up. I can assure you some of the greatest investment catastrophes come from so-called risk-free investments. Long-term capital management is one of the examples that almost blew out the entire global economy. Then you have all the last time there was the ETF that's trading the volatility that went into crazy mode. So all these crazy modes, when they start, it starts overnight. You can never predict when this will happen. It's always like a spring. They compress the spring further and further and further until suddenly the spring just jumps. And when the spring jumps, hell breaks loose. And worst case scenario, the entire ETF can go down in the process. So I want you to remember that before you make a random decision to buy into certain ETF and thinking that you're getting a great bargain because that one ETF is overvalued, other ETF is undervalued. Those valuation models are completely visible to everybody in the world. That is not a unique information. This is not something that only you can see and nobody else can see. There is no information advantage when you look at the book value of an ETF. The same thing happened with the GME's AMC. the institutional investors were shorting those shares because the intrinsic value of the company was worth nothing, and yet the company was multiple $billion. And then the small people gang up together and kill them. The same thing can easily happen with Bitcoin Cash ETF. So I want you to be extremely careful before you think, okay, I want to short this ETF. And I want to use this opportunity, particularly targeting the institutional investors here. Don't get cocky just because you know certain information, then everyone else are the idiots in this game. That is not the case, all right? So be very, very careful. Ideally, I would suggest everybody buy the Bitcoin Cash with the cash you have and transfer the Bitcoin Cash to your private wallet. Your own wallet is more important than anything else because you want to control your coin. If you don't have the key, you don't have those coins in your hand. Please keep that in mind. The more and more information come to the surface now that exchanges like Binance are in trouble, and they recently reduced the withdrawal limit to a tiny amount, which is the indication of something seriously going wrong in the background. If you have money with Binance, I would strongly recommend to take the money out of the Binance. And if you have money with other exchanges that you think you can trust them, there's no reason for trust any exchanges if you can just use your own logical thinking. And remember, transaction fee on Bitcoin Cash network is so small. There's no reason not to hold those coins in your own hand. It is not that difficult to hold your own coin in your own hand. Just make sure you don't store your coin at home, at work, or other places people can just take it away from you. Instead, find a place where nobody knows where you're going to store your coins and just put your paper wallet into it, or a steel wallet into it, or Trezor wallet into that location. One of the best locations I can recommend are those storage companies. You know, those anonymous storage companies that normally people store the furniture with. Why don't you store your coin with them? Nobody will know. Nobody will know. So I store my coins with my lawyers. So that's an added additional safety. But normally, for a normal person, you just have to store your coin with a safe deposit box solution. That's all you have to do. You do not need to trust any exchanges. This is not like a share certificate. This is not like a bond paper where you need a custodian. For crypto assets, you do not need custodian at all. So just keep that in mind and do your best to secure your coin. Don't be swayed by the day trading opportunities. And you're going to see great movements coming up. But you want to be sure that you still own those coins so that you don't get taken away the opportunity of 10x, 100x, 1000x when the time comes and suddenly there is a custodian issue like what happened with Mt. Gox and many other exchanges has gone down. You don't want to be the victim of rug pull. So I cannot warn you often enough about this. I know you want it to be convenient, but convenience or safety, you choose. You get to choose which one do you prefer. I will take safety over convenience any day. All right, that's good for today. See you in the next one. Bye.